The following is a presentation of TFNN. The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. Thanks for joining me. 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and we got some retail sales that are a little bit weak this morning. Markets taking it in stride. We're green across the board, but by single digits right now. S&P's positive by 3 points, trading at 69.86. You see a little bit of volatility early this morning from 7:30. They were talking about in the Tiger's Den. Somebody got those numbers early. There's your 8:30 volatility on the retail sales. They disappoint. Flat numbers when the market was looking for 0.4% on the upside, but we trade a bit higher from there. And right now, S&P's barely in the green, 69.86. NASDAQ 100, pretty similar action in the last hour and a half. You trade lower. Little volatility on the retail sales number. We're higher since then, positive by 0.1%, up 23 points. Dow up 4 points at 50,223, and the Russell up by 1 this morning. Bitcoin continuing under pressure, 69,000, off $2,000 on the session, but we are still well off where you were on that low, 60,000. But yeah, that was a small reprieve, and we're now down from 72,700, and that 72,700, yeah, it was the initial open on Sunday night, but even towards the end of the session yesterday, you're down about $2,300 from where we were coming into the close of the markets yesterday in Bitcoin. Ethereum down 5.1% from that acceleration high that we saw towards the close yesterday. And boy, you think Bitcoin's in trouble. Ethereum's really in trouble, man. Look at the way this volume is just ramping up to the week of last week when you did 130,000 contracts, blowing away anything we've done to the downside. And yeah, it seems like the April lows, 1387. Bitcoin's been on a heck of a run. Man, that Tom Lee trade, what's he down now? Buying, basically loading up on Ethereum at around 4,000. We're at half of that, 2021. We jumped to yields this morning. A little bit of higher price, lower yield. We got the 10-year right now, positive by 8 ticks, 121.14. And you're talking about a yield of 4.16, just that quick. And you see the 8:30 volatility. We were already higher price, lower yield. Feels like some of the data could have gotten out at 7:30. It does. You had the market trading lower. You had yields trading higher. We get the number at 8:30, and it's a weak retail sales number for the holiday quarter. And we get some dollar weakness. And there's your 8:30 number. The dollar drops from about 96.93. We're trading at 96.76 right now in that dollar. Yeah, quite a break yesterday, and we are breaking the lows of yesterday right now in that dollar. You jump over to metals. Just chopping around from where we were at the close. Quite a little sell-off at 6 o'clock. We're approaching where we were at the close yesterday. Gold flat at 5,079. Silver right now down 41 pennies at 81.28. And let's talk some retail sales, especially for a holiday quarter. The headline, unexpectedly stalled. Excuse me. So the numbers, as I mentioned at the top of the show, basically flat. Month over month, flat. Sales ex autos and gas, flat. Control group, actually negative. All those were supposed to come in at 0.4%. The value of retail sales, unadjusted for inflation, flat after a 0.6% gain in November. Maybe some of those purchases for the holidays got pulled forward. I tell you, they got pulled forward in my household. Okay, go rewind the replays, right? What was I talking about? When was I talking about all those good deals with Apple, buying a phone, tablet, watch, all that stuff? It was in November, man. Black Friday sales, they were tremendous. They were. 8 out of the 13 categories posted decreases. Clothing stores, furniture outlets included. Sales of auto dealers also fell. You had Outlays rose at building material stores and sporting good retailers. So a loss of consumer spending momentum at the end of the holiday shopping season. And we'll see. And that could just be a story. I mean, some of these Black Friday sales, they do still have real sales in the holidays, but you got to get them around Black Friday, and then everything becomes a sale for 4 or 5 weeks, right? But nonetheless, that number comes in this morning. Inflation's at restaurants and bars eased 0.1% after jumping the previous month. That's the only service sector category in retail sales. Restaurants and bars, 1.1%. But we got the market taking that in stride right now. As I mentioned, you come in at 69.80. That's a weak sales number, man. And we are right now sitting in positive territory across the board. We jump over the streamers. So Netflix is higher by almost $1 right now. You got Paramount Skydance. They're sweetening their offer a bit for Warner Brothers Discovery. And this is just going to keep going. The company agreed to pay a ticking fee. And what that is, folks, talking about how much, okay? The ticking fee is payable to Warner Brothers shareholders for any potential delays in receiving regulatory approval. And so they're focusing on a little bit of a gamble, risk reward, as they have been. That regulatory deals may be a problem, as they should. And you know what? They should be a problem for probably Paramount as well. But the lesser of two evils in terms of the consolidation going on in streaming. Again, I bring it up every time. Netflix, the number one streamer. Warner Brothers, the number 3 streamer. The number 2 streamer is Amazon. Can't be good for the consumer when you're going to have the number 1 and the number 3 combining, and the number 2 is really not in the streaming business. It's just an ancillary part of their business in terms of bringing people into Prime. Fully financed, and hey, Ellison did put this personal guarantee up there. And $54 billion of Bank of America, Citi, and Apollo. Whew. And yeah, the Netflix deal, remember, does not include the TV networks such as CNN, TBS, and Discovery. So that deal has to go through later this year. And then you would get the Netflix acquisition of Warner Brothers that does not include those cable networks in 12 to 18 months. You jump over to Warner Brothers Discovery. Oh, they like that, don't they? Look at this. All right, there's the reaction. Hey, it's the same thing as saying, we still got 2 bidders at the table. And boy, when you're fighting it out with one of the richest families in the world, it ain't over till it's over, and they're bringing it. Netflix shares right now, higher. Interesting price reaction, right? You got Warner Brothers higher, you got Netflix higher, you got Paramount higher. They're all higher. They're all fighting for the same assets in there. Warner Brothers the one they're going to make out. Netflix, they're paying a lot of cash. All right, folks, stay tuned. We'll come back. We'll take a look at some of the tech stocks. NVIDIA shares up another $1.50 in the pre-market. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. You have CVS out here, out with their numbers. You accelerate lower, you bounce a bit. We're back to almost right where we were prior to those numbers. CVS trading at $75. Now this thing just recently, was it back here a couple weeks ago already? It sure was. And that was when the government set the rate of increase, right, for the Medicare Plus Advantage, 0.09% increases. They thought it was going to be 4 to 5%. So the insurance companies are going to get a lot less money for each Medicare Advantage plan person that they get to sign up. And that stock accelerates to 72 from 84. We're at 75 right now, slightly lower. You jump over to CVS. Reaffirms their profit outlook. So even in the face of that Medicare Advantage, they're reaffirming it. Fourth quarter earnings and revenue that beat estimates. And they got a turnaround going on. Full year profit coming in at $7 to $7.20 a share, in line with $7.17, what the market was looking for. Maintaining revenue guidance at least $400 billion. How's that for a number? The market was looking for 409. He says at least 400. Guidance includes $20 billion in headwinds. And that's partly the company's move to exit the Affordable Care Act individual exchange market. And then the other half reflects the company's retail business adjusting to lower drug prices after the most favored nation deals that President Trump struck with more than a dozen pharma companies. Their primary care providers improving profitability. Net income almost $3 billion for the fourth quarter. The insurance segment's medical benefit ratio, a measure of the total medical expenses paid relative to premiums, 94.8%. And yeah, the lower that number is, right, the more money they make. How much money of the premiums you're collecting are you actually paying out? So the unit delivered a very strong quarter. And this is the insurance business. Another year of margin improvement, primarily driven by Medicare Advantage. The company's business for those privately run Medicare plans is continuing the path towards target margins of 3 to 4% by 2028. Now, what's remarkable is that that's what I was just talking about. That's this drop right here. If they can get no increase in the money that they're getting per person, how are they maintaining those margins? Maybe they were making way too much money. Now, you're going to hear a lot about this deal, though, in terms of the price hikes that the government's allowing, Medicare Advantage, that's the company's business for privately run Medicare plans, which they get a kickback from the government. And that is where the rise in the government said 0.09% is what you're getting for an increase. And still they're continuing the path of margins of 3 to 4% by 2028. Higher than expected medical costs over the past year as more Medicare Advantage patients return to hospitals for procedures they then delayed during the pandemic. Excuse me. And then, yeah, this is where it makes reference to it. Last month, shares of the Medicare Advantage insurers took a hit after the Trump administration proposed nearly flat government pay rates, 0.09%, I think was the number, for the plans in 2027. He does not believe that the proposed rate reflects medical cost trends. CVS has started a dialogue. I would love to start a dialogue with the government as well, with the Centers for Medicare and Medicaid Services before the agency finalizes the rate notice in the beginning of April. Quite a number. Now, you're going to see this play out because what's going to happen is you're going to have a big lobbying deal come out. And the last time this happened was they ran a Super Bowl ad. Now, they probably didn't have enough time to even consider that this year in terms of the timing. But you have the AARP, okay? You have a lot of lobbying when it comes to retirees on Medicare and Medicare Advantage. And you're going to see a hard press from that lobbying arm in terms of wanting more government money to go to that, because what does happen is in order to create differentiators for those Medicare Advantage plans, okay, that's where you get all these kickbacks to the actual customers, right? The clients. You, the consumer of the Medicare Advantage plan. They'll give you a card that you can use for drugs. They'll give you a card, a cash card, an ATM card, right? You can use for medical visits, right? They're kicking you back easy cash. And what's going to happen is they're going to begin stripping out some of those services to maintain some of those margins. And yeah, and so you're going to see it play out. So it looks like they're out of the woods right now, but I wouldn't be so sure. Okay? Because I would love to see the analysis, and even maybe they're going to have a conference call, because I, as a taxpayer, want to know in the same deal, hey, are you telling me that your margins are going to be fine if the government gives you no pay increase whatsoever for service in Medicare Advantage? Yeah, then I think they'll be okay. right? Now there's UNH dealing with their own woes, of course. But yeah, backing it up to the same deal. Look at this thing, man. No sign of strength just yet. UNH shares at 275. CVS with their numbers this morning trading at 75. Been quite a run for them. All right, we got Spotify with their numbers as well. Catching a little bit of a bid after quite a pullback. You talk about volatile, man. We'll talk a little Spotify when we got back. Spotify numbers up by $45. You're up by more than 10% on this equity. And yeah, you talk about a run. Let's back it up further than that. Look at this thing. My goodness. Well, you're catching a bounce today. See how deep this pullback was. Right to the 50%. You had some volume on that pullback last week. You sure did. Spotify going to be up by $50 on the open. Market's in the green. We're coming back, folks. Market digesting some weak retail sales. We'll be right back.
You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. We got markets open, digesting a weak retail sales number for the holidays. And yeah, we got the S&Ps right now. We bounce from the lows at about 8 a.m. We're pushing the highs. Pre-market, 69.94. NASDAQ 100 barely in the green, up by a 10%. The Dow. Look at this Dow. New highs. Dow is strong, man. Strong like bull. Walmart shares are flat. UNH shares up by 0.3%. Yeah, Goldman will do it. There's $10 on Goldman, just like that, man. You want to follow the Dow. Make sure you know what the $1,000 equity is doing in a price-weighted index. Goldman up by 1%, up $10 to $9.53 right now. The Russell up by 0.2%. We check in on gold, up by $16, $5,096. The dollar this morning, yeah, this dollar's under pressure, man. We're going to 90, I think, folks. Look at this move. Okay, you make that initial thrust lower at the beginning of last year from 110 all the way down to 96. And we are now in a consolidation. Doesn't feel like it, right? But this is how it works sometimes when you get a consolidation. We've been in a consolidation from about 98 to 97 to 100 for almost 10 months. Almost 10 months. And you go longer picture on this thing, man. You've been in an upward channel since 2008. You match all those lows, okay? They're right where we are. We're breaking that price level. Now, I was talking to Teddy Cakestat last week, and he was talking about, potential for a weaker dollar. And one of the things we were talking about, and I've brought this up before, folks, okay? I don't believe we should be promoting the greatness of a weak dollar, okay? You're going to see some of the impacts here, whether you're talking about countries are worried about investing when you have dollar weakness, okay? That's one of the things that happens. Now, there's benefits to it as well, talking about exports, all that stuff, right? But we're not in that territory yet, okay? The dollar near 100, even at 97, is one of the stronger dollars that we've had over the last 24 years, right? Yes, we've had a few spikes over 100, and in COVID, we were way above it. Now, remember, all of that strength helped us out tremendously during COVID, folks, okay? Where European countries that had a very weak dollar, very weak currency versus our U.S. dollar, they were getting clobbered with inflation, okay? Because at least we had the benefit that the money we were paying for anything outside as it goes, right? But bottom line is, you take out this acceleration from COVID highs and where we were at the beginning of 2024, you've been under 100 for most of the last 24 years, folks, outside of that acceleration. So there is a real potential here, and I think 90 is the next stop. All right, it was a one-way trip from 2021 when you initially got COVID weakness. We accelerated out in a remarkable acceleration from 90 to 115. And I think we're coming right back down to that number, man. Okay, and that's the test. And it's a very reasonable test where we are right now. And look at this move. Pay attention to these moves on a weekly, folks. These are two ginormous moves down, and we're only on Tuesday trading right now. And we have the dollar down over a full point on this bar right now. All right, we jump back to some of the equities with their numbers. As I mentioned, CVS with their numbers down by 0.4%. Spotify to the upside. Look at this thing. Wow. Okay. Well, we had quite the sell-off last week. We'll see if we can get it back this week. Monthly active users growing 11% to 751 million. Whew. Look at these numbers, man. Excuse me. The company said it had the most successful Spotify Wrapped ever. Not familiar. 300 million active users on that one. Earnings per share, boy, they crushed it. Revenue, barely. Revenue, 7% year over year in the fourth quarter. And yeah, 751 million users. Paid subscribers, 290 million. Latin America, Europe, and the rest of the world, and improvements to its mobile free tier. I've only used their mobile occasionally. Don't use it often. I have Sirius, so I use that a lot. It's amazing how one company, right, they got me into a lease like 15 years ago, and then I have the cars that you get a lease, and then you get that first year, and here I am, a 20-year subscriber to Sirius practically. Not quite 20. Probably going on 10 plus, 15 plus years. They like those net income numbers, that's for sure. And they're going to keep growing. Imagine, it's almost like nothing. They're going to grow their monthly active users by 8 million looking ahead. Well, that's a bright spot on today, and it's not stopping just yet. Look at this acceleration on the open, man. Wow, we just traded up almost $30. Okay, you jump over to Coca-Cola. Coca-Cola. Man, we got volatility everywhere. And yeah, it's not what have you done for me recently. It's what are you doing for me in the future? Modest growth amid demand concerns. That whole drink sector, man, is really... There's so many competitors. Whether you see the prebiotic drinks right now, right? Like Poppy, right? Is that one of them? I'm not even familiar. And then you have the carbonated beverages. You have the energy drinks like Celsius, let alone the Red Bulls. And then you have the carbonated beverages like Ice Beverage and all that good stuff. And yeah, they'll come in and they'll buy those brands. I mean, Coca-Cola, I talk about Fairlife, right? Fairlife milk, great milk, folks. All right, it's lactose-free, processed. It's got more protein in it. They should send me a carton of it for all the love I give it. But it's great milk. But guess what? Coca-Cola owns it. Yeah, Fairlife. Organic revenue increased 5% in the quarter. Okay. Unit case volume rose 1%. That excludes pricing. Yeah, they have some slight increases in improvement. They've been struggling. North America increasing 1%. It rose 2% in Latin America. And there you go. Higher demand for Fairlife. Fairlife's a good brand. They made a smart decision buying that. Was offset by the sale of Coke's finished product operations in Nigeria to one of its bottlers. But yeah, higher demand. But offset by some actions in Nigeria. Sparkling soft drinks, flat volume. Coke Zero Sugar climbed 13%. Coca-Cola up by 0.7%. Nvidia gives back some of the gains. Amazon down 0.5% right now. Microsoft up 0.5%. We'll come back and we'll talk some Fiserv on their numbers, down by 1.1%. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's right now negative by 4, NASDAQ negative by 70. We got a little bit of selling to kick off the session, below where we were at 8 a.m., and we got a retail sales number in market. Got a little bit of selling going on right now. Markets, S&P's 69.76. Jump over to yields right now. Yeah, it's continuing, approaching 4.15 right now. Yields dropping, the dollar dropping. Okay, it's a risk-off day. Be careful right now, folks. And you talk about risk-off. How about this chart of Fiserv? Okay, now, there's a lot going on in this equity, folks. Okay, and technically speaking, yeah, you did find a little bit of a bid here. The low there is $60.46. Okay, that's a monthly for December. And then you traded a little bit lower on lighter volume. On January of 186, we go back to a weekly. Okay. You know, you're almost looking for any strength here. It's tough to find the strength here. Okay. And then you go, that's your weekly, and then you go to the daily, and they just got problems everywhere. Okay, look at these gaps. Right? Kaboom, kaboom, kaboom. Here we are right now. And so we take a look at the numbers. Earnings beat expectations with recovery from stock plunge. All right, now getting into the numbers. Come on. This company's still like a $33 billion equity, I believe. Come on. That's my. What are we at? $32 billion right now. Okay, this company. Beat expectations, as they say. Earnings of $1.99 a share, down from $2.51, but the market was looking for $1.90. Revenue, almost $5 billion, flat compared to last year. In October, they announced third quarter earnings that were well below expectations. That earnings miss was tied to unrealistic growth projections, cost-cutting that limited customer service deliveries, and relying on short-term initiatives that neglected building long-term relationships. Okay, that's according to their CEO. Now, their CEO succeeded Frank Bisinano, and he is the man appointed by Trump as the Social Security Administration Commissioner. Now, what's remarkable here, okay, is that one of my best friends, folks, I've talked about it before, runs, okay, a multi-billion-dollar credit card processing business, okay? They do more than $1 billion a month. They're probably approaching $2 right now, okay? And they have a relationship with Fiserv because they're in the credit card processing business. And so I'm talking to them about this stuff going on, and he tells me a story, okay? And this is anecdotal, all right? But when I hear this story and you hear this story, right, it's exactly what was going on. And so they buy a bunch of stuff off of Fiserv, okay? And Fiserv, what do they say they do? Payments and financial services technology solutions, okay? Merchant solutions and financial solutions segment. So what they'll do is, my buddy and their company, they buy a lot of, right, whether it's processing machines, right, the actual machines that people are using, okay? They have Clover, which is a big point of sale. So people are using that for credit cards, right? You sell, a company comes to you, they want to process credit cards. You'll process the credit cards for them. You send them a point of sale. You set it up, right? You set up the whole computer system in their business, right? So they have a point of sale, they have a computer, they have a cash register, and they're processing it through your credit card processing platform, okay? Now, check out what they were doing. It's a long way to intro it, but this company spends millions of dollars with Fiserv, okay? Millions of dollars, right? You're servicing tens of thousands of merchants all over the country, and you need to supply them with goods. So what Fiserv does is, on this run up here, okay, because this was taking place in 2024, okay, is that Fiserv says to my friend's company, listen, I'm going to give you the bargain of a lifetime. What I want you to do is, if you buy like a couple years worth of the items that you need from us right now ahead of time, okay, what we'll do is we'll store those items for you so you don't have to handle the storage, because I know that's a problem. We'll store them for you, and we will also extend the warranty life on those products because we know that you're going to buy them. Listen to this story, okay? This could get worse. And they're admitting to it, okay? But these are the types of things that were occurring, is that they were having some of their best clients bring forward years of revenue, and they were tweaking the arrangements to be able to extend the warranty life of those products because they knew they weren't going to need to sell them to a client or allow them to be serviced for years. They were going to store them because they knew they didn't need them right now, right? And so my buddy's telling this story, and they could have saved hundreds of thousands of dollars by doing this deal with Fiserv, okay? They could have, because they were giving them such discounted prices that they could have saved hundreds of thousands of dollars by taking this deal that Fiserv was giving them. My friends didn't take the deal because they thought it was so suspect they didn't know what was going on. They thought the company might even be going out of business. That they were like, what is this deal? Why would they ever do this deal for having us pay years of orders ahead of time? They're going to store those orders. They're going to extend the warranty for all those items so we can just use them whenever we want. They'll ship them for us, right? They drop ship that stuff for them. Imagine that. That's what's going on. So there could be more coming down the line in terms of what could be, and in general, okay, that is some hijinks, man. That is some crazy hijinks. Now, here's where it gets even better. All right? You back things up to the gentleman who is the CEO. Now, this is the guy. He curtailed it out of Dodge, okay? He's now the top job at the Social Security Administration. This is the guy that was running everything when this was going on, okay? He sold his stake right before the company's stock cratered. And not only that, okay, he netted over $500 million from the stake in the company, right? He had to sell them prior to joining the Social Security's office, and then he gets a tax break, okay, that he's able to then sell those and reinvest them because it's a forced sell. I'm trying to find the exact one where this talks about it, okay? And not only does he get to sell out at the highs before the market craters, he gets to save on the taxes he would have paid because it's a forced sell as part of a divestiture by joining the administration. So he takes the $560 million out of Fiserv then. He puts it back in the market. He pays no taxes on those gains. The stock craters because they figure out the accounting was a scam, and he's running the Social Security Administration. Be careful of Fiserv, folks. I heard that story. It blew me away, right? We're coming back for one more segment, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
And listen, you want to trade this thing, you might get some extreme volatility, but even talking about in the den, right? You're going to hold this thing overnight. I would just be prepared that, you're not going to zero. Okay, this company is going to be around. But when you hear those types of stories and, they talk about that, they're going to defend it. They're under lawsuit from investors, folks. Okay. And this is just anecdotal stuff that I'm hearing from huge industry players. Okay. The company, my friend, I'm talking about a multi-billion-dollar credit card processing company. These are the companies they were hitting up. Now, I was bringing it up, talking about the taxes, okay? Not only does he sell it from May until about July of 2025, so he got out around here. Yeah, up 200% from where you're at right now. And then he gets a tax break that he gets to delay. This is the guy running the Social Security office, folks. Okay? You better believe investors got scammed out of this one. All right, those growth numbers weren't real. They were financial engineering, pulling forward revenue. It's like the oldest trick in the book, right? You pull forward future revenue, you talk about growth numbers, and you get out of Dodge, and he gets to indefinitely, okay? Yeah. Indefinitely delay those. He can indefinitely postpone payments on capital gains taxes on those sales by reinvesting the proceeds in other assets. He gets to use the $500 million to invest it in anything he wants and avoid taxes on it. He gets out of Dodge. The company drops by almost 70%. It should be a bigger story, and it would if there wasn't enough going on, folks, with that company. So be careful if I serve. You want to trade the heck out of it during the day, that's fine. You're getting into it, just be prepared. There's a lot going on in that equity, and sometimes, okay, when you talk about that, it can take a little while to unwind, even if you think it's down, 200, 300%. All right, folks, markets catching a little bit of a bid yet again. S&Ps. Look at that run. 7,000, we'll call it. 69.99. NASDAQ up by 38. We check back in on gold. Yeah, a little bit of a reversal on gold. We got yields right now climbing. Yeah, the 10-year. Just like that, 4.15%. Folks, thanks for kicking off your trading day right here with me. Stay tuned. Basil Chapman's up next for the Tiger Technicians Hour. Steve Rhodes at 11. Fast Market at 12. Larry at 1.